So there's multiple factors that create your FICO credit score, and we're going to go over them. And we're also going to go look at Credit Karma. This is just basically showing you the same exact factors and how negatives can impact your credit score. Okay, so here's a chart that came straight from Experian, which is cool. Experian, TransUnion, and FICO, they use FICO and Vantage, but we're going to focus on FICO mostly because a lot of people don't use Vantage. So here, the biggest chunk is your payment history. 35% of your credit score is payment history. This has the biggest impact on your credit score. As you can see here, I'm actually going to bring up my little laser pointer. And on this side is the Credit Karma chart that I was telling you about. So with this Credit Karma, 35% of your credit score is made up of the payment history. 30%, which is still extremely impactful, is how much you owe, the amounts owed on the debt. Immediately after that is your 15%, your credit history. So your credit history is how old your account is. And then the 10%, it's your credit mixture and it's new credit. Now it says less influential here for less your credit mix and new credit. I beg to differ. I think it can be extremely impactful. And the reason why is I look at credit reports all day long. I fix credit all day long. And I've seen plateaued because they don't have a good mixture or they have new credit and their score drops. So we're going to get into that. So Credit Karma, top on the list because, again, it's the most influential. Payment history. This particular client, their score wasn't too bad, but these are some of the areas they needed to work on. And unfortunately, their payment history was pretty bad. There were a lot of missed payments. So if you have 30-day missed payments, 60, 90 ongoing, that will drastically drop your credit score. And it's always been like that, but especially with this new FICO 10 and this new FICO 10T, it's more impactful. So before a 30-day lateness was bad, it dropped your credit score somewhat. But now one missed payment I've seen people score drop 50 to 120 points with a 30-day lateness. Now, the reason why it varies so drastically is because, again, your credit is based off of averages. So there were other factors, other items on that was impacting their overall credit report. So that's why. So the least you could do is try to make your payments on time. If you think that you're going to miss a payment, try calling the agency and see if you could work something out. A lot of times, some money is acceptable as opposed to no money, and at least it won't be deemed a missed payment. If you do wind up with a missed payment anyway, you can try to, again, do a goodwill letter, reach out to your bank, reach out to the creditor, whomever you need to talk to, and discuss it with them directly to see if they can overturn the missed payment. Just explain your situation, explain what you're trying to do and your goals, but you came up on hard times. Some communication is better than absolutely no communication. And the worst they can do is tell you no. All right. I'm not one that writes goodwill letters. I don't really personally find them to be effective. What I do find to be most effective is writing letters to the CEO, and even making phone calls. All right. Next is the 30%. So if you owe debt, it impacts your credit score. It's a negative impact. So basically, this falls under utilization. So if you look at the Credit Karma, it's credit card usage. Okay. Amounts owed. How much do you owe in debt? But it's not just your credit card utilization. Like, for example, if you have a car loan, if you have a mortgage, you will see that this impacts your credit score pretty significantly. But ultimately, it's your credit card utilization. So with Credit Karma, it falls under the amounts owed. You can actually click on this part of the screen and it will pull up all of your credit cards. And when you look at all the credit cards that you have on your account, it will show you the utilization for each one. And it will also give you a percentage as well. And collectively, it will tell you what your overall credit utilization is or what your percentage is. So if you have high credit utilization, then obviously your score is going to drop. So you want to bring this down to 15% utilization or less, and your score will skyrocket. But this is why it has such an impact, because it's 30% of your credit score. Next is credit history. So it's the age of your debt. The older the debt, the better it is for you. You want to have old positive debt. I'm going to do another video on student loans and why I don't think you should delete your student loans from your credit report. But mostly in a nutshell is because a lot of times your student loan debt is very, very old. I've clearly seen student loan debt that is older than me, okay, which is a good thing. So the older the credit, the better. This, even though this says 15% and it's moderately influential, again, I beg to differ. If you have young credit and everything else could be perfect, but you have young credit, your score is only going to go but so far, okay? In order to be in the 800 club, in order to be 750 to 850 credit score, you have to have age. That's what makes a difference. So here, this person, their credit age is pretty low. So that's a negative that goes against their credit score. This kind of coincides with new credit history. Even though this says this is only 10% of your credit score and it's less influential, it does impact your credit history. What do I mean by that? Okay, again, let's say you have a student loan that's 20 years old, but you spoke to so-and-so and such, and this mortgage lender told you to open a bunch of credit cards. It will raise your credit score. Or they said, go to self-lender, get a secure credit card, open up one right now, get a couple of them, and you're approved. You do that and you're approved for 4 or 5 new lines of credit. You've now taken away almost all of your credit history. What do you think that's going to do to your credit score? It's going to drop it drastically, because you took and basically annihilated it because you opened 5 brand new lines of credit. Okay, that's a no-no. I don't agree with that. Lenders and whomever, I don't know who. The only people I know that encourage their clients to get a secured credit card are people that don't know anything about credit, or mortgage lenders. New credit means that you're not trustworthy. Nobody wants to be looked at that way. So why would you keep opening new lines of credit? Also, if you open up new lines of credit and then go apply for something, it looks like you're begging for money, or it looks like you're desperate for a loan, and you don't want to come off that way. Also, this new credit, it shows up as an inquiry. Inquiries are 2 to 3 points. If you're in the process of buying something major like a house or a car, no, don't get a secure credit card. That's the opposite of what you want to get. The people I do think secure credit cards are beneficial for, people that are just starting fresh with their credit. Maybe they just got out of a divorce, their credit was messed up, and they're trying to build, and they're not looking to make a major purchase anytime soon. If you're a teenager, you want to get it for your kid so they can build credit on their own and they're learning and educating themselves. I think those type of people would greatly benefit from a secure credit card or a company like Self. Everyone else, if you can avoid it, please do. Okay. Now, what some people do is still apply for new credit. They'll get approved. Score will drop because of the new credit that they apply for, but they will get an age trait line to counter that. So if you don't know anything about trait lines, check out one of my other videos. I have an older video where I'm discussing trait lines. I'm explaining what they are. No, they're not illegal. Again, your score and your credit report are all about averages. Anytime you are applying for credit, it's basically the average of everything, even when it's your debt to income ratio and you're applying for a house. The mortgage lender is looking at your overall everything, your debt to income. That's average. and your credit score. They may be looking at the credit score, but this is what makes up your credit score. Lastly, it's the credit mixture. This is less influential as they're stating, and I can agree to that. That much I can agree with. Now here, this person has just 10 accounts. They're looking at this as a negative. I've seen again where people, everything else was green except here, and it didn't drastically drop their credit score. So that's what it is, just letting you know. But I can definitely agree, like it doesn't have much of an impact, but it's there. And the reason why lenders look at that as some level of importance is because, again, they need to know if you're a high risk client or not. They need to know, are you credit worthy or not? And if you haven't had that many accounts and they're new accounts, the few accounts that you do have, you're high risk, you're untrustworthy, you don't have a good track record. It doesn't reflect on your credit report that you have a high track record, a good track record. So you just want to try to have a good mixture as possible. And a mixture, you want to have a bunch of different accounts, but you don't want to count that are just all credit cards, all car loans. You want to mix it up, right? So you want to have a mortgage or report your rent. That's a trade line. That's a line of credit. You want to have, maybe some people do have a couple of cars and they have different credit cards, things like that. Mix it up. And that is, in a nutshell, the makeup of your credit score. Now, hopefully I explained this thoroughly. If you guys need me to do another video, let me know. If you have any questions or concerns, definitely leave a comment. You can send me an email. My email address is fixmycreditnow850@yahoo.com. And definitely schedule a consultation if you're ready for credit repair. You're ready to start the credit repair process. That's when you make a consultation. And you can go to fixmycreditnow850.com, and I'll talk to you guys soon.